What is CVP? Cost, volume, profit. So we did the chapter. So previous chapter, if we apply it with the perspective of absorption costing, so CVP analysis is not correct analysis for our prediction and profit making or getting target profit and break-even quantity and break-even sales, right? Because this is called the full costing method, which do not segregate costing between variable and fixed. Under absorption costing, the cost of a unit consists of direct material, direct labor, and both manufacturing overhead of variable and fixed. So variable and fixed selling and administrative expenses are treated as period cost and are deducted from revenue as incurred. So if we want to find out the unit cost in absorption costing, so unit cost is direct material, direct labor, manufacturing overhead. If the question mentioned fixed and variable, you add it, because absorption costing do not segregate between variable and fixed costing. So you find out the manufacturing cost here. It's really hard to write here. I'm gonna switch off my video and take the screen out. Okay, so we were discussing that under absorption costing, unit cost would be equal to direct material plus direct labor plus manufacturing overhead, regardless the segregation of the variable and fixed costing. So that is called manufacturing cost, which is also called the unit cost. And what is the period cost? Selling and admin. So there is no segregation here as well for regarding variable and fixed, right? So this will be treated in income statement directly, because period cost will go to the income statement. This is not the part of unit costing. Okay, now let's talk about the variable costing. Variable costing, we also call that direct costing or marginal costing. It treats only those costs of production that vary with output as product cost. Which means if we produce more, cost will be higher. If you produce less, cost will be less. So you get the idea. So it will only include unit cost, only variable part. So direct material, the nature is already variable, because the more you produce, the more you would be needing direct material. Direct labor, also the nature is variable. But manufacturing overhead, only variable part, right? So let's talk about this. So this approach merged with the contribution approach of income statement and supports the CVP analysis, because it focuses on separating variable and fixed cost. And regarding what we call a unit cost under variable costing, it consists of direct material, direct labor, and variable overhead. So fixed manufacturing overhead and both variable and fixed selling and administrative expenses are treated as period cost. So that would be your manufacturing cost. Under variable costing, remember, in absorption costing, we included manufacturing overhead, both fixed and variable. But here in variable costing, we only including variable manufacturing overhead. So what would be the period cost? Both selling and admin, fixed plus variable, plus the figure left here with the fixed manufacturing overhead. So did you notice something strange here? The absorption unit cost is greater and variable unit cost is smaller. Why? Because we are using less amount of manufacturing overhead. We are taking out the fixed manufacturing overhead from manufacturing overhead. But the period cost of variable cost is higher. Why? Because we are including additional amount of fixed manufacturing overhead here. So we can also compare these as here. The absorption costing, the product cost is highest. Why? Because it includes direct labor, direct material, and both variable plus fixed manufacturing overhead. Consider only selling and administrative costs both as period cost. But when it comes to the variable costing, in variable costing, only variable nature are included in unit costing. So variable nature of the manufacturing overhead is included here, not the fixed. So fixed would be added in period cost. So you can say that unit cost under absorption costing greater than unit cost under variable costing, right? And the period cost under variable costing is greater than period cost absorption costing. Right? Any question? Minsu, Leo, William, Ayana?
All clear.
Actually, I don't understand like what's happening.
Okay, that's good that you tell the truth. And Camille, Stella, Crystal, Camila?
No question.
Okay. So, wait a minute. Here we go. Minsu,
Yes.
pay close attention now.
Okay.
So we are talking about variable costing system, right? Number one is called absorption costing. Which we already did in our, when we talk about under applied, over applied, right? So we use this method, absorption costing. And today we'll talk about, variable costing. So up till now we have discussed the differences. What is the difference between absorption costing and variable costing? So in absorption costing, we talked about if we want to find out unit cost, or other name is product cost. What we do in absorption costing, we calculate the unit cost or product cost as direct material plus direct labor plus manufacturing overhead, right? Minsu.
Yeah.
And we did not segregate this manufacturing overhead as variable or fixed, right? By applying the predetermined overhead rate over there through calculations, we didn't segregate that this is variable or fixed, right? We just find out manufacturing overhead and we add it, right? To find out manufacturing costs. or product cost. Let me write in product cost. Understand, Minsu?
Yes.
And what is period cost? And period cost under the absorption costing would be selling and administrative costs. So it means similar with the, so okay, total. It would be better if I write it down total here. Total manufacturing overhead. And I should write it down here like total include, right? That is also include fixed plus variable. Means you understand now?
Yeah.
Okay. Now today we'll talk about the variable costing. So under variable costing, unit cost or product cost would be equal to direct material, direct labor, but only the variable part of manufacturing overhead. Understand?
Yeah.
It means we skipped fixed manufacturing overhead from here, right? Minsu.
Yes.
And that would be added to the period cost here. The period cost is equal to the same total mean fixed plus variable both part. Total selling and admin cost plus the left part here, from here left part, fixed manufacturing overhead, and that will be equal to our period cost.
Okay, I understand.
Now you understand that?
Yeah.
And now what we learned from here, you see here the absorption costing, the unit cost of absorption costing is greater than the variable costing, right? Because it includes fixed, this is total manufacturing overhead, and it include only variable part, right? So product cost under absorption is greater than the product cost under variable costing, right? Minsu,
Yes. Yes.
understand?
Mm-hmm.
Yes. And the period cost under absorption is less than the period cost under variable. Why? Because under variable costing, we also add fixed manufacturing overhead, right?
Mm-hmm.
Now you understand that?
Yes.
Good. Now we are on the same page. Okay. So I was talking about this stuff here. So unit cost or product cost under absorption is greater than the variable unit costing, and the period cost of variable is greater than the absorption. Let's move further. So we have an example here, which is also from your book. So Huawei company produces 25,000 units of a single product. Variable manufacturing cost total 10 per unit. Variable selling and admin cost